Hi, Jeremy here. What is a stop loss? Okay, so I've been through every scenario you can imagine on day trading. I've even doubled my money, tripled my money over the span of just weeks, and then wiped it all out in one stupid trade. Now, one time I made $30,000 over the span of 3 months and lost $25,000 in a 1-hour trade. I did what other traders do. I looked in the mirror and I called myself a gambler, a loser, a weakling, an idiot, a criminally irresponsible psycho, and a coward. The reason us traders do that is because we know from the past that we're supposed to limit our losses by exiting on a small loss. We even have exact exit points that we must follow, but we tend to regret those small exit losses because so often the value of our position goes up right after we sell it off at that small loss. This phenomena is thoroughly covered in another video of mine, and I won't get into it here, but I will say is that I finally found the solution. And it does not require becoming a born-again religious zealot or self-whippings or shameful self-guilt activities. It simply requires stop losses. So instead of trying to force yourself to have the discipline to sell at a loss, the only discipline you have to force yourself to have is to place the stop loss. There are 3 general ways to create stop losses in my day trading techniques. For example, one version of a stop loss is called stop on quote, and simply means that when the position achieves a certain value, the brokerage will sell the position for as close to that value as possible. A simple example of that would be a stock that is valued at $100 with a stop on quote setting of $99. When the stock drops to $99, the brokerage sells it for very close to $99. This is the simplest form of a stop loss, and it's the most common form. Each brokerage and trading platform will have its own way of presenting the stop loss, and it's important to simply learn the individual steps to place a stop loss order on a position. Okay, the second one is called OCO. One cancels the other, OCO. These allow one to place 2 sell orders at the same time, one which is an order that fills if the position goes up to a certain point, thusly grabbing profit, while also having a stop loss in place so that if the position drops, it will be stopped out before dropping too much lower. Whichever direction the stock decides to go, it will either fill at the higher level or the lower level, unless these levels have been placed so distantly that the position just rides in the middle forever, which could also happen. Trailing stops. These are identical to a stop loss order, but the value at which the position will be stopped out at on a drop keeps going up as the position's value goes up. There's always a set quantity or percentage that a trailing stop is set for. It trails behind the value of the position, never dropping, only getting pulled higher. So once the position finally decides to fall a bit, it sells off. This also provides a nice safety net while allowing the position to rise and rise and rise, while the stop loss simply rises along with it like a tether pulling it up. So the best method for me has been the OCO. And this is because by producing or creating a limit on the top, that means the brokerage cannot sell it for less than that amount. And what that does is if the stock goes up to that level, it guarantees a certain profit. Whereas if I use a trailing stop, the stock or position could actually drop fast enough and punch through the stop loss pretty far. And it never sells at the exact amount that you're saying is the stop loss amount. Okay, so if you have a stop loss here and the stock drops below that point, it'll sell for lower than that. It just tries to get as close to that level as possible. But if the stock drops so fast, it'll actually punch through so far down that any profit you had is gone and wiped out. But the actual point of this video is to tell you that the mantra that I've created for myself that has finally cured me of the illness of huge, massive losses on one bad trade is as follows. If I don't place a stop loss on every trade, then one day I will lose everything. So this means that if I do any single individual trade without a stop loss, I might as well just kiss my account goodbye, because one day I will lose everything. So rather than focusing on my supposed lack of discipline, cowardice, weakness, the exorcism of gambler demons, etc., all I need to focus on is making sure I place stop losses on every single trade that I do. And if I'm not doing that, then one day I will lose everything, and that's how it goes. So that's my new solution. I have to place a stop loss on every single trade. And I've learned that the hard way by losing hundreds of thousands of dollars simply because I didn't put a stop loss on every trade that I did. I only need to focus on the discipline of placing stop losses, rather than on the self-denigrating statements and conclusions after losing a ton. The sting of losing a little is so much easier to withstand as compared to the amputation of losing a lot. So if I'm ever talking to a day trader and I find out they aren't using stop losses, I tell them it is my prediction that they are going to wipe out everything one day. I'd love to hear your take on this. I'd love to know if you use stop losses or if you've succeeded without using them. And if so, please tell me how, because I would be completely shocked and surprised. Like and subscribe for more similar, fun, engaging content about trading. And if you want to know exactly how I do my method, then just go ahead and click that link below on the 20-minute trader method, fully explained for free.